morning, everyone, and thank you very much for joining me. Just like yesterday, if I could get some sort of indication that you guys can hear me. Can you guys hear me? Please let me know. Okay. Thank you very much. Okay, excellent. Welcome to the morning market review. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address rshaw@fxcm.com. Today is Wednesday, the 25th of May, 2022. I'm going to bring up the high-risk investment warning. I'll keep this on screen for a few moments. And then I'll bring up the commentary disclaimer, and we'll get on to the analysis. All right. Usually when I log in, I get some sort of, I get a welcome message. I haven't got that today, so I wasn't sure if the sound was working, but anyways. Let's bring up the market commentaries disclaimer. I'll keep that on screen for a few moments as well. And here's our references, Market Scope 2.0. We're going to do the CNBC morning note, and we may look at trading view. I understand we don't have much time this morning because at the top of the hour we'll jump onto the second webinar, which is the Crypto Minute, and I'd like to do them separately because I'll upload them separately to the website. Hey Lisa, and thank you very much. Thank you everyone for joining, and let's go ahead and see what the news headlines are for the markets. European stocks head for higher open as markets try to bounce back from losses. And it reads follows. European stocks are expected to open higher on Wednesday as global markets try to bounce back from a widespread retreat in the previous trading session. The higher open for European stock comes after regional markets retreated Tuesday, tracking negative global sentiment as US markets struggle to maintain a comeback rally following a week of losses. There was some positive data on Tuesday with a flash purchasing managers index reading for the Eurozone in May coming in at 55.8, slightly ahead of estimates as business growth across the continent slowed but remained resilient. Still, global concerns about inflation and growth are prevalent and continue to weigh on sentiment. Incidentally, those flash PMIs for the US and the UK, specifically in the services sector, were disappointing, very much so in the UK. So we just got to keep an eye on that. The number came in around about 51. And remember, 50 is the line in the sand. Anything under 50 is contraction. Overnight shares in Asia Pacific nudged higher in Wednesday's trade, with New Zealand Central Bank announcing another rate hike. Meanwhile, US stock futures rose on Tuesday night after the Nasdaq Composite dropped during the regular session, following a warning of slowing growth from social media company Snap that hurt the tech-heavy index. And Snap or Snapchat, it's hard to believe it had such a huge influence on the market, but it did, and that's really because it warned of just another company warning of economic slowdown. The World Economic Forum continues in Davos on Wednesday, with the event bringing together political and business leaders from around the world. This year's summit comes after several years of COVID-19 pandemic and amid Russia's invasion of Ukraine, which is at the top of the agenda. CNBC will speak to a number of leaders today, including the CEOs of Rabobank, Dutch Prime Minister, and Spain's Deputy Prime Minister, amongst others. All right. So if anybody's interested, those who CNBC will be speaking with. All right. I have the DAX index on the screen at the moment. Let's just talk about that for a few moments. And we're looking at the weekly time frame. Now, what we're going to do is we will do a comparison between DAX and the Dow, because they are showing two very different markets in terms of sentiment. If you take a look at the DAX, whilst these the 62% retracement certainly is a level that we need to watch, not so much because it's a fib level. I want to be clear about that. In fact, let's take it out. I'm not so concerned with the fib level but more with the price resistance. I just want to explain why this is a key level that we need to watch. And the reason that we need to watch it is because of market dynamics. Why? So this level here is 49.05. So there's a few things that we need to acknowledge. Number one is that round numbers are psychological. So if somebody's looking to sell or buy, they'll say, well, let's buy at 15,000 or let's sell at 15,000. In this case, the psychological 15,000 to me suggests resistance, just because we have we've had a really stressful 2022 for a myriad of reasons. The round number 15,000 being a psychological level, something that we need to keep in the back of the mind. I don't think that it is. I don't think it's anything serious. It's just round numbers, and anything sort of around, so sort of your 10, 20, 30, 40, 50, 60, 70, 80, 90, and of course your round numbers. So that's one aspect. The second aspect, and the more important aspect here, would be the price dynamics. So what I mean by price dynamics is you've got support, 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 resistance. In other words, 15,000 certainly a level that the market has paid attention to in the past, because we can see there's been reaction levels 1, 2, 3, 4, 5 with little reactions in between that as well. So it's certainly a level that is looming above where price is. Why am I putting so much stress on this? Well, first of all, this higher trough here is still something that is potentially in the making. It's not quite there yet. It's not quite there yet. So the obvious question is, well, why is it not there yet? Because we're using three conditions. Okay, we're using three conditions to measure. And what are the three conditions? So you guys should be familiar with the reference candle. Okay, what's the reference candle? The reference candle is the candle with the lowest low in at least 3 candles. So here's the lowest low in at least 3 candles. That's condition 1. Condition 2 is price needs to move above that reference candle's high. We've done that. And then the third condition is we need to close above that reference candle's high. It doesn't look like we've done that, not in any sort of conclusive manner. So we're missing the third condition here, but we're pretty close. We're very close. So this higher trough will keep as a question mark. But of course, let's assume that it does get the question mark. Can it take out this peak here? Because a higher trough followed by a higher peak, that's the definition of an uptrend, right? So it's very important, if we get the higher trough, that we get the higher peak as well. Well, that's where this resistance comes in. That's why it's looming above us. So the question now is DAX value? Is there opportunity in the German market? Is there good companies at cheap prices? And the higher trough, higher peak would suggest probably so. But let's just understand the dynamics of the resistance. And I think the best way to do it would be to, let's just get rid of this, is to take a look at it on Microsoft Paint. And let's call this the 15,000. And we know that this is a level that has been considered many times before because of the key reactions off of it. Well, at 15,000, there are 3 possibilities for market participants. There's only 3 possibilities. What are the possibilities? Well, the first possibility would be you can go long. Okay, so you can buy at 15,000. The second possibility, of course, is that you can sell. So you can go short. Okay. So those are two. What's the third? Well, the third is you can just do nothing. You can wait and see. So now, if we go back to our chart, well, whoever went long here, well, they're holding serious losses, right? Whoever went short here, well, they've made some nice money. Okay. Whoever did nothing here is probably saying to themselves, well, I wish I went short. Okay, so there's the psychology in action. Okay, and that's built up since May 2021. Whoever went long here has made money. Okay, whoever went short here lost money, and that psychology, that mass psychology builds up as a market psychology, as a herd psychology, and eventually, what's going to happen is we're going to come back to this level. So kind of over there, we're going to come back, and now we're going to have to see as well, what are the longs that went long here, are they going to cover because they've been holding losses for so long? Well, if they're going to cover, that's going to be selling pressure. Okay, are the shorts that made money going here going to short again, because that's the logical thing to do if you've made money, right? Well, that will add selling pressure. Okay, are the people that did nothing over here going to now come to the party and say, well, now is the time to short? Okay, so we've got three possible pressures that are adding resistance. The longs that are getting out of toxic positions, that's going to add to selling pressures. The shorts that are going to short again, that's adding to selling pressures. And the previously uncommitted looking to come to the shorting game. Well, if that happens, that's the exact definition of resistance. And that's why this 15,000 is looming. It's a resistance level. It certainly may be overcome because we're not forecasting here, because we can't forecast. We may have a concerted effort by market participants to be buying value. Okay. In other words, to be buying German companies at depleted prices. And if that's the case, okay, we should get that higher peak. Let's get one thing at a time. Let's get the higher trough defined. Then we'll see if we get the higher peak. Of course, momentum is a key player. It's a key ingredient as well. Do we get the stochastic moving towards that upper quintile? Because that's where the magic happens, right? That's where the magic happens. You can see here it reaches the upper quintile. Here is where the swing happens. Okay, so we need the momentum to come to the party as well. So we're now looking at the DAX, asking what if this is the higher trough to be followed by a higher peak. We go to the Dow. Okay, we have a different picture. Okay, the American market does not look like that. The American market looks much weaker. Peak, trough, lower peak, lower trough, lower peak, lower trough. Whilst we're looking to see where the higher trough is for the DAX, we're looking for the next lower peak for the Dow. Okay, so this over here is a factor because markets are positively correlated generally. Okay, generally positively correlated. There has been a break in that correlation between the German market and the US market. But the fact that the US market isn't showing signs of support, well, I think that may be a fourth factor that we need to consider in terms of that 15,000 level. Is the American market going to be an extra form of resistance? Now, one last thing, because we're going to end here and we're going to have to go to the crypto minute, and the observation is as follows. In bear markets, correlations tend towards -1. In bear markets, correlations tend towards -1. So what does that actually mean, right? It's kind of something that is not easily understood, but it's key to markets success in bear markets. It suggests that in bear markets there's no real safety amongst the financial classes, whilst they may be all kind of moving in different directions during the bear market. Okay, once the bear market hits, they all tend to correlate towards -1. Now, if you go back to the 2008 crisis, everything was coming down. There was no place to hide. So if we get the same phenomena here, where correlations tend towards -1, then again, is that now another form of resistance on the DAX? Okay, so you can see we do have a positive picture here, and it's very encouraging to see because it suggests value. But let's not forget that there are headwinds that are facing global markets that the DAX will not be immune to. So let's see if we get the higher trough, then let's see if we get the higher peak. And if we do that, I think that would be certainly a bullish development. All right. So what I will do is conclude at this point, and if you will join me in our next webinar, we'll continue with the cryptocurrencies. Thanks very much, guys. Anna introducing the gas crisis. Let's talk about that in the next webinar, Anna, and then we'll focus on the cryptos. All right, see you in a moment.